Hello there. Today I want to present you a valuation of a couple of very interesting, relatively small miners at the size of about $1.5 billion in market cap. Those are K92 and SSR Mining. This presentation is based on their Q2 2024 reports. Welcome to My Finance Teacher. As for our valuation model, what we're basically looking at is discounted per share value after all-in sustaining costs, long-term debts, and after taxes. The factors that we include in our valuation model are, of course, the prices of the precious metals, gold, silver, as well as copper. We look at the reserves and resources in the ground. For those reserves and resources, we do take into account the proven and probable reserves, as well as only half of measured and indicated resources. In our model, we don't take into account any of the inferred resources, never mind any further exploration success. Extracting those resources out of the ground is costly, and we look at all-in sustaining costs. We also subtract the long-term debts out of the value, and we do the same with taxes, subtract the taxes. We look at the per share value, so shares outstanding is another factor that affects our model valuation. And we do take into account the time value of money. Hence, we look at the discounted per share value. With a bit of a secret sauce on the insiders, holding some percentage of those shares outstanding, as a larger percentage of shares in the insider hands is beneficial in aligning the interests of those insiders with the general shareholders. As you see, this is not an exhaustive list of all the factors you might think to include in such valuation models. Jurisdiction, for example, the amounts of cash that the companies are holding are not explicitly included in this model. Besides, with market sentiment fluctuations, the actual share prices from day to day or even from week to week can fluctuate significantly away from the valuation we present here. Moving on to gold price scenarios, as usual, we're going to look at three scenarios, same as we did for previous videos on Q2 2024 reports for some of the major gold miners. We're going to stick to the conservative scenario, plugging in only $2,000 for the gold price. Our balanced scenario plugs in the gold price of $2,300, and optimistic scenario plugs in the gold price of only $2,600. Although currently gold price is somewhere between $2,600 and $2,700. Before we continue with our valuation model, let me tell you that back at myfinancesteacher.org we have much more detailed review of some of the most interesting junior miners. Here's a fascinating example of a uranium junior, as well as an insight into this outstanding spin-off opportunity. We have the most comprehensive nickel and uranium reports on the internet, and beyond that we have a lot of regular updates on a range of markets. Coming back to K92 and SSRM, let's have a look at their reserves and resources in the ground. K92 doesn't actually report any proven and probable reserves in the ground. They do have measured and indicated as well as inferred resources. As I mentioned, we don't take into account any of the inferred resources. Hence, for measured and indicated resources, K92 has 2.3 million ounces of gold, 5.5 million ounces of silver, and over 246 million pounds of copper. SSRM, comparatively to K92, does have more reserves and generally more resources, at over 6 million ounces in proven and probable reserves of gold, plus additional 4 million ounces of M&I resources of gold, over 22 million ounces of reserves of silver, plus an additional 66 million ounces of resources of silver, over 27 million pounds of copper reserves, and an additional 30 million pounds of resources of copper. Beyond that, SSRM also has some lead and zinc resources. We don't even include these in the valuation model, leaning that much more towards a conservative valuation. As for K92's reserves, those P&P reserves, while they don't have any of the resources in the ground qualified as reserves, they have successfully managed to ramp up their production to about 130,000 ounces of gold per year. And because our valuation model favors reserves versus the resources, I'm going to treat K92 numbers slightly differently. What I'm going to do is I'm going to take half of these resources, M&I resources, and simply count them as reserves for the purposes of this valuation model. And that's after subtracting what has been produced so far since the last report on those resources. That would give us effectively 1.1 million ounces of gold reserves, 2.6 million ounces of silver reserves, and nearly 118 million pounds of copper reserves. Moving on to all-in sustaining costs, long-term debts and taxes. All-in sustaining costs for K92 are at $1,490 an ounce. That's the midpoint of the 2024 guidance. As for long-term debts, K92 has less than $40 million in long-term debts. And as for the taxes, I'm going to assume a flat tax rate of 25% to simplify and speed up this valuation process. Looking at SSRM, they have $1,600 per ounce of all-in sustaining costs. SSRM effectively has over $552 million in long-term debts, but that's including $240 million in the remaining Chopler site remediation costs. Remember, all the way back in February, there was an unfortunate accident at Chopler. Since then, the company has already spent $55 million of the remediation costs, and I'm going to add the rest of the expected costs to their long-term debts, bringing that number to $552 million. As for the shares outstanding and discounting, K92 has nearly 237.5 million shares outstanding, with a very nice 2.53% over 2.5% in insider hands. SSRM has 202.1 million shares outstanding, with less than 1%, that's 0.91% in insider hands. At current annual production, reserves of SSRM will last for 19 years. Adding half of M&I resources extends that average mine life to 26 years. As for K92, keeping in mind that effectively we treat half of their M&I resources as reserves, those reserves would last for 9 years at current annual production, and with half of the remaining M&I resources, this average mine life extends to 13 years. Beyond that though, I do like K92's opportunities for further exploration success. And as for our discounting, I'm going to use a discount rate of 7%. Moving on to the most interesting part, let's look at our valuations, starting with the conservative valuation where we plug in the gold price of just $2,000, and in this valuation we only look at the proven and probable reserves in the ground. Think of it as just yet another risk measurement telling you where share prices might go if gold just drops out of bed here. And of course, in such terrible sentiment environment, the investors wouldn't generally place much valuation on the resources. Hence we only plug PNP reserves over here, with K92 valued at $1.50 and SSRM valued at $4.42. In our balanced scenario, we plug in the gold price of only $2,300, and even here we only look at the proven and probable reserves in the ground, which gives us a discounted per share value after all-in sustaining costs, long-term debts and taxes of $2.44 for K92 and $8.58 for SSRM. And in our optimistic scenario, we plug in the gold price of $2,600, and in this optimistic scenario, we look at the value of proven and probable reserves in the ground, as well as only half of M&I resources, that's measured and indicated resources, without any of the inferred resources or any further exploration success. So even our optimistic scenario does lean somewhat towards being conservative. And these numbers would give us K92 valuation of $4.83 and SSRM valuation of $15.78. Notice that SSRM valuation changes significantly as we cycle through different gold prices. One of the reasons for that is a larger leverage versus gold price as shown by higher all-in sustaining costs. Another thing that you'd probably notice here is that the market currently views K92 at a somewhat higher valuation, and there are perhaps very legitimate reasons for that. As I mentioned, this model does not include any exploration success or much of the future projections outside the guidelines for the current year. But looking into the future, the outlook for K92 is quite interesting. Here are some of the highlights. The production is expected to grow significantly over the next 2 to 3 to 4 years as Stage 3 and later Stage 4 expansion is completed. Additionally, perhaps as a sign of this upcoming growth in production, the Q3 result for K92 as reported in early October is already significantly larger. It's nearly double the amount of gold equivalent produced versus say Q2 of this 2024. As for upcoming exploration potential, there is also quite a lot of possibly green lights coming up, with a half a dozen targets looked at and 4 out of 6 targets being drilled at the moment. Even if just one of these targets ends up adding significantly to current resources, that could surely be viewed very favorably by the market. There are some interesting drill results already, especially at these core targets, with drill results showing multiple dozens of meters, anywhere from 34 to 78 meters of very nice grades, anywhere from 7 to 27 grams per ton. That's at Cora South, and at a different target we again see multiple meters, anywhere from 4 meters to 12 meters, with outstanding grade, anywhere from 7.5 grams per ton all the way up to, as you see, nearly 87 grams per ton. So let's see if Q3 report over the next several months and exploration developments over the next couple of months will help K92 with an even more significant share price re-rate. As for SSRM, I would expect a significant change in value once the Chapler mine is back in production. And while a full ramp up of that mine will probably take a couple of years, that's possibly using the reconstructed heap leach that unfortunately collapsed in February. But much sooner than that, perhaps into early 2025, the company expects that using a sulfide plant, the production will commence, although at a lower level at the start. So there are interesting opportunities with both of these miners. Let me know down in the comments below what do you think about these two, or perhaps some other miners that you're looking at. Have a wonderful weekend. Bye bye.